Assalamualaikum warahmatullahi wabarakatuh. Hi everyone, my name is Dela Khairunnisa Siregar. I'm from University of North Sumatra. In this video, I want to explain you about accounting for frame. First of all, I want to tell you about definition and characteristic of frame. In simple terms, a frame can be defined as a form of business entity alliance to run and develop a business between two or more people with the name of the business together. Firm company can be viewed as a form of business alliance that is established and owned by more than one person with a common name, and the responsibilities are also divided equally and are not limited to the size of the ownership. Characteristic of firm. Some of the most important of these characteristics are: first, mutual agency. Every partner of the firm is a representative or agent of the firm for this business purpose. Thus, any action taken by allies, as long as they are still within the normal framework of the company's business, are action of the firm. In other words, this action by itself would bind the firm and all of its allies. Second, limited life. These features mean that the lifespan or legality of a firm is limited by matters that are in accordance with the contents of the agreement. If the reality in the field turns out to be on longer in accordance with what is stipulated in the agreement that has been made, then legally the firm is considered dissolved. Third, unlimited liability. The responsibility of each partner is not limited to the amount of capital they have deposited. That means, if the firm's assets are not enough to cover the debts, then the private assets are also used as collateral or means of repayment of the firm's debts until everything is finished. Ownership of an interest in a partnership. Although the firm is an association of allies, and of course the personal characteristic of allies will be inherent in the firm, all the assets that have been invested by allies have become joint property and are no longer the personal property of each ally. Fifth, participation in partnership profit. Conversely, if the firm suffers loss, the allies must also share in bearing it. Reason for choosing firms. There are four reasons why choosing firms. First, capital collection. The limited amount of capital that is always inherent in a company that is in the form of an individual can be overcome by choosing the form of a company firm. Second, easy formation and dismissal procedure. As mentioned above, the procedure for ordering a partnership company is simple and straightforward. Third, inherent personal characteristic of the owner. The first and third characteristic of the firm, as mentioned above, have always been one of the important factors why form of the company firm is the alternative chosen by investor. Types of firms. There are several types of firms. The classification of this firm depends on the point of view used, including: first, from the point of view of business fields. In line with the available and selectable business fields of each company, various options for this partnership company are also available. For example, in the fields of manufacturing, trade, service, plantation, mining, and others. Second, from the point of view of allied rights. As explained above, the liabilities of firm partners are not only limited to the amount of paid-up capital. Furthermore, in line with the first characteristic that allies or agent of the firm, it's clear that the rights of allies will also certainly cover a wide scope. Some important issues about firm. There are several issues that are always discussed related to the form of this firm in practice, including: first, although from a legal point of view, a firm is the same as an individual company, which is not a separate entity from owners, but from an accounting point of view, the firm is a separate entity from its owners. This is indeed a requirement in accounting. Second, in practice, many firms operate using an accrual basis accounting system, but some of them use a cash basis or a modified cash basis. This is possible because the firm records are made for allies and must show the information they need. Third, many people think that the third characteristic of firm, namely unlimited responsibility, is a form of firm weakness. Because of this, people sometimes choose to sit as silent allies in a limited firm. Fourth, in the case of firms of a limited type, the obligation of passive partners, known as silent partners, are not only limited to the amount invested, but also they are limited to taking some action in the management aspect. The accounting process for establishing a firm. Although fundamentally, the accounting process for the establishment of the firm is only concerned with recording the investment of each partner, technically there are several variations. First, firma is established by the merger of individuals, which means that in this case, a person who does not have a company, thus there is no form of recording whatsoever at the time of establishment of the firm. In this condition, the recording of investment made by allies is carried out by debiting the estimate asset invest and crediting the estimate of the partner's capital. For example, on April 1, 2016, A and S agreed to form a firm. A invests 20 million in cash, while S invests 25 million and 5 million of vehicle and equipment. The record of this incident are as investment, cash on debit 20 million, allied capital A on credit 20 million, as investment, vehicle on debit 25 million, equipment on debit 5 million, and allied capital S on credit 30 million. With these records, the AS firm's initial statement of financial position can be structured as follows, as shown on the slide. Second, firms are established by the personal joining of proprietorship. If a firm is established by joining a private person who does not own a company into a private company and forming the firm, it's possible that only private partner investment is recorded, while the investment of an allied individual who owns the individual company is sufficient to adjust the books of the company concerned. This means that the record that were held by a P16 company will be passed on to become the firm's record or books. For example, from the example above, it is known that as in an entrepreneur who owns an individual company, and at the time of the establishment of the firm, the company's financial position is as follows. As shown on the slide, it was agreed that A would deposit 20 million in cash, while S made an investment of 30 million consisting of 25 million in vehicle and 3 million in equipment. The value of equipment in the financial position statement was 5 million. It was agreed that it was only 3 million. The company's debt S was also brought into the firm's debt to meet the investment value of 30 million, as will make a cash deposit. The record of this incident are Method 1, as company records are passed to AS firm records. As investment, cash on debit 20 million, allied capital A on credit 20 million. As investment, allied capital S on credit 2 million, equipment on credit 2 million, cash on debit 5 million, allied capital S on credit 5 million. With these records, the AS firm initial statement of financial position can be structured as follows, as shown on the slide. Method 2. Company S records are closed or not forward to become AS firm records. Then the records are as follows. As investment, cash on debit 20 million, allied capital on credit 20 million. As investment, cash on debit 7 million, equipment 3 million, vehicle 25 million, account payable on credit 5 million, allied capital S on credit 30 million. With this recording, the AS firm's initial statement of financial position can be prepared the same as the statement of financial position above. Firms are formed by combining proprietorship. If the firm is formed from existing private companies, it is possible for allies to select the books of one of the companies to be forwarded to the firm's books, or to create a new books for the firm. If the first alternative is chosen, it is sufficient to record the investment of individual company owners whose books are used or select to become a firm books by making adjustment to the books, while recording of investment for other company owners is carried out as usual. For example, from the example above, it is known that A is also the owner of an individual company, and at the time of the establishment of the firm, the company's financial position is as follows, as shown on the slide. It was agreed that A and S would invest 20 million and 30 million respectively by transferring all assets and liabilities to become firm assets and liabilities. As equipment worth 5 million is only valued at 3 million, while S debt rise to 3 million because there are outstanding expenses. If there is a shortage of the agreed investment value, its partner is obliged to deposit it in cash. The recording of this incident is as follows. Method 1. The books of one of the partners are forwarded to become the books of the firm. For example, the books of Select S Company. The ES firm's records are as follows. S investment, cash on debit 6 million, equipment 2 million, vehicle 15 million, account payable on credit 3 million, allied capital A 20 million. S investment, allied capital S on debit 2 million, equipment on credit 2 million, cash on debit 5 million, allied capital S on credit 5 million. Conversely, if the books of company A are selected to be the books of the firm, the AS firm's record will look as follows. S investment, allied capital A on debit 1 million, account payable on credit 1 million, cash on debit 5 million, allied capital A on credit 5 million. S investment, cash on debit 7 million, equipment on debit 3 million, vehicle 25 million, account payable on credit 5 million, allied capital S on credit 30 million. With these records, the AS firm's initial statement of financial position can be structured as follows, as shown on the slide. Method 2. Open a new book for the firm. Company A and S books are closed. The AS firm's records are as follows. S investment, cash on debit 6 million, equipment on debit 2 million, vehicle on debit 15 million, account payable on credit 3 million, allied capital A and credit 20 million. S investment, cash on debit 7 million, equipment on debit 3 million, vehicle on debit 25 million, account payable on credit 5 million, allied capital S on credit 30 million. With these records, the AS firm's initial statement of financial position will be the same as the firm's statement of financial position above. So that's all my presentation about accounting for firm. I apologize for all the misunderstanding grammar and words, and I'm so sorry if I made many other mistakes in this video. Thank you for attention. Assalamualaikum warahmatullahi wabarakatuh.